Get started. I'm going to give you an introduction to Henley and Partners, and we're going to talk about current trends in wealth migration around the world before focusing specifically on residence programs across Latin America. Then we'll look at some taxation questions, and then there's space for questions and answers. You will see in the little ribbon across the top or bottom of your screen there a Q&A tab. So if you'd like to post questions and answers, please do so, and we will address them either as we go throughout the show or at the end, depending on what's most appropriate. With you today, I am Peter Farino. I am the Director of Tax Services here at Henley and Partner, and I'm delighted to be joined by our Managing Director of Latin America, Michelle Sawyer, who is here in Florida, to speak to us from the US of A, that Latin American city. And so, without further ado, let me see. We are here. Yeah. Henley and Partners, you know who we are because you signed up to our webinar, but we have been 25 years defining the sector of citizenship and residency by investment. And we now have over 70 offices worldwide, helping our clients with more than 60 different options as to how to change their residency or citizenship around the world. Over that 25 years, we've advised over 25,000 clients. Didn't start at 1,000 a year, but it's a nice average by now, running more than that now, particularly with what's going on in the world. In addition to advising the individuals, we advise governments as well, because our experience of helping people move and knowing what they're looking for is helpful when governments are looking to find ways to enhance their foreign direct investment. And over that time, those programs we've been advising on have raised their governments over $15 billion in foreign direct investment from nationals wanting residency or citizenship in those countries. So we advise both sides of the transaction. We look at the individuals, helping them decide that whether it's high net worth individuals, entrepreneurs, business people, helping them acquire residency or citizenship around the world. We can also help them acquire real estate, look at the education for their children, and some of the logistics of getting there, whether it's a private jet or whatever. Concierge services will help people make it as simple as possible. From the government side, helping them understand strategically how to design and set up a program. The program design, both in terms of what the investment is and the qualification criteria, the setup, the operation, how to conduct the due diligence, how to make sure you're getting the right kinds of people being associated with your country, and how to handle the processes efficiently and effectively, and the due diligence and positioning. We have a lot of our events where we promote the different programs, and we work with the governments to do that. Today's programs are not ones that we're necessarily promoting just but because we genuinely believe that these are the ones that are of interest and most use to people. So those two bits work together hand in hand. We know from the individual clients what they're looking for. We know for the governments who they're trying to attract. And we've put those two things together, and that ends up being very valuable for both sides. As I said, we have over 70 offices around the world now, both in the countries where we've got programs and the countries where we have people looking to move and looking to migrate. And you can see the sheer number of offices in the US these days has been a particularly interesting area where people are looking at where they can go for a variety of reasons. And you see, like in the Caribbean, there are lots of offices there because that's where we have a lot of citizenship programs. And we're on every continent except Antarctica, but I don't think anybody chooses to want to live in Antarctica just yet. But if they do, we'll be there first. So wealth migration, what is going on? Where's people going? It seems that you can't pick up a newspaper without people talking about millionaires relocating. That's particularly true in my native UK, of course, because there does seem to be a outflow of that at the moment. But millionaires on the move has been a trend for the last 10, 15 years. The numbers almost trebled since we started reporting on it in conjunction with an external research agency back in 2013. Then only 50,000 millionaires were moving. This year it's close to 3 times that much, and projections indicating this continues to rise. Of course, every time a high net worth person moves, they're not only taking themselves, they're taking their family, and they're also taking their money potentially. And so this means that they make a disproportionate impact on the economies that they go to and also the ones they leave. So the world's fastest growing markets, this is in percentage terms, of course. So Montenegro, it doesn't take a lot to grow by 124% and have 2,800. But you see, the UAE is the one that gets all the press coverage. But the US is still very popular for people to go to because it remains one of the largest markets for so many different reasons. But today, you look at there, Costa Rica and Panama have some of the largest increases in the number of millionaires over the last few years, well, last 10 years, 2014 to 2024 to be precise. And we're going to talk today about why that might be. Particularly, you see in Latin America, the distribution of high net wealth individuals and the millionaires that move around. I mean, Bermuda is sort of, it's not exactly Latin America, but it's close enough, isn't it? And you see, like with the Cayman Islands, they're also increasing. Mexico, interestingly, the numbers going up. Some of that is people moving there, but a lot of that is just the success of the economy there and the number of millionaires increasing organically, which is good for every country. But you see further south, Colombia, Brazil, Argentina, where potentially people are, worried about where their worth is, worried about how the economy is going, and so potentially looking for other places to go. And of course, that 10 years has been very volatile, and of course, some of those years have been outflows and some of them have been inflows. But we see there's continual migration within the continent, helped by sorts of similarities of language and culture, although they're not identical, of course. And that means that this is an interesting area for migration, both between countries in the region and also into the region as people from other parts of the world are looking at, the realizing the interesting aspects of the economies here and the valuable tax benefits that may come from there. It's not only about tax, of course, but tax systems around the world work in many different ways. We advise on residency and citizenship, and probably the single biggest thing I have to do on literally every call I'm ever on is to explain to people the difference between residence and tax residence. The right to live in a country is an immigration status and applies, you need to meet various criteria, and that determines whether you are able to be there or not. Once you are there, then how you are there and how long you're there and on what status you're there will determine whether you need to pay tax or not. Now, you can have the right to live there and not be there enough to be taxable. You can also be there too long, even though you shouldn't have been, and still be taxable. But generally, the idea is if to make sure these two of them are working together. Tax residency is typically obtained by being present in the country for more than 183 days, either in the tax year or a 12-month period, or having a main home, permanent home, available accommodation in that country. And do remember that because that comes up a bit later as being an interesting planning opportunity. What a main home actually means. Now, every country, well, almost there are 200 different ways of defining tax residency, but you'd be surprised how many subtly different ways there are. And as a result of that, you can be resident in more than one country under their criteria. And so, in which case, double tax agreements come into effect, which say that if you are resident in both countries, how do you decide which country taxes you as a resident and which one taxes you as a non-resident? And that can get messy. It's rare for you to be taxable in more than two. I have seen it a couple of times in my career, but really then that gets very complicated indeed. But there's always a solution once you understand the criteria. You tend to need to look at the double tax agreements there because the consequence of being a resident or a non-resident are very simple. Only two countries, with one exception, can tax any sort of income. Every type of income has a source, whether it's a dividend or a real estate income's easy because it's the country where the property is. Dividends, potentially where the company that is paying them is resident of. Every type of income has a source, and the country of source gets the first right to tax that, regardless of whether it's being paid to people in that country or anywhere else in the world. Now, not every country always exercises that right, and double tax agreements often mean that they, yield that right to the other country. And typically, these things work on a reciprocal basis. So, country will tax income arising in that country on the source basis, and they don't take into account your income in the other country, they don't look at the overall position. They typically say flat income there, taxable there under the rules there, or with a withholding tax if it's savings or investment income. And that country will tax first and then tell the person that's been taxed how much tax has been paid, and typically provide some kind of paper for them to take to the country of residence. Because the country you live, work, where your family reside, that is where that country will tax you on your worldwide income. And that includes not only income in that country, but income from any other country as well. They have the right, but not the obligation. We'll come back to that. Now, if you are the country of residence and the country of source has already taxed, you've got that piece of paper that you got there. And as you fill in your tax return in your country of residence, you say, I've already paid tax on this interest or these dividends or this real estate income. And you claim double tax relief, either by deducting the foreign tax against the residency country tax, or in some countries, there's an ability to exempt. Those treaties are less likely, but there is still a possibility the calculation gets a bit complicated there. Now, the exciting element, I did say there was one country which is an exception, and that is the United States of America, because the US will always tax its citizens and green card holders on their worldwide income, even if they don't set foot in the US in the year, even if they haven't set foot in the US for decades, they're still taxable on their worldwide income and need to file a tax return there, with credit given, of course, to the tax paid in the country of source and the country of residence, but the filing does need to be made. Now, technically, two other countries also tax on citizenship, as one of them is North Korea. I tend to think we're not likely to see a huge amount of that. And if there's anyone here from North Korea, it doesn't look like it. The other one is Eritrea, but that doesn't actually tax in the same way. So again, it's just that they want a notional appearance fee. But again, we don't get many people from Eritrea. So, but who knows, one day. So, basis of taxation, residency and citizenship. If you are in a major economy, Europe, any country, member country, the OECD, country of residence will tax your worldwide income, plus the US with the extra layer will tax US citizens as residents in the same way. Now, where it gets more interesting is countries that aren't so big and maybe don't sort of feel so powerful that they want to flex their rules or flex their muscles so much. And often smaller countries that try to position themselves as a regional hub or have a long history of trading, such as Singapore or Hong Kong, they will then say, well, we want people to be based here. We want businesses to be based here for the region. And because of that, we don't want to penalize them by taxing income that's earned everywhere else, where we have, as a small country, limited ability to police that anyway. So what they will say is we will tax on a territorial basis, which is just income earned in that country is taxed. Because if you have a regional head office, then the people are spending the money, you're making money from sales taxes or property taxes. So maybe taxing income from the rest of the world is more trouble to prove that it even works. And you see, you don't exactly think Singapore and Hong Kong are doing too badly by not taxing the income that arises outside. And strangely enough, Panama and Costa Rica, yeah, similar type economies, similar economic profile, also use a territorial basis. Malta and Cyprus have a variation on that. In addition to the territorial basis, if you bring income into that country that has been earned elsewhere while you're tax resident, that can also be taxed. Or looking at the other way, any income you don't bring in can be left outside of the tax base. So that can be useful as well. But again, small countries with international trading histories, and that's, yeah, maybe the sort of recurring pattern there. Now, there are special outliers. Zero tax, for example, in the UAE or Monaco or the Bahamas. UAE has plenty of other sources of income. Monaco and Bahamas, then they're sort of business taxes or consumption taxes. And so they have no income tax at all. Larger countries like Italy, Greece, and Switzerland have found a sweet spot for them to say, okay, well, we'll tax foreign nationals that move here a flat amount, a fixed amount for each year on their foreign source income. So we don't have to do the admin and the paperwork, but we're getting a contribution to them from them towards the cost of running a large economy. In Greece, it's 100,000 euros. Italy, it's 200,000, but rumored to be going up again soon. but with some changes to the investment rules. Switzerland, it varies by which part of Switzerland you're in, which canton, as they call it. And it will starts at about 250,000 Swiss francs and varies there. But that's for another day. And so if you're interested in those, watch out for our later webinars on those. But for now, territorial systems in Latin America are what we will be focusing on now. So I'll hand you over to Michel in a moment, and he will then take you through what the different programs are. Firstly, here's the map of the region, and then we'll look at it country by country, and I'll come back at the end to start talking about tax again. But for the meantime, Michel, please take it away.
Thank you so much, Peter, and thank you everyone for joining the webinar again. It's a pleasure to eventually be here presenting some of the options available in Latin America. And right now, before going into the three specific programs that we're going to be speaking today, Costa Rica, Panama, and Uruguay, no particular preference when it comes to those of how we put them in the terms of the presentation. But just very briefly, just wanted to touch base on the different programs we're able to assist our clients. So here we have a very comprehensive map of the leading residence and citizenship by investment programs. Definitely a landscape that is constantly evolving. We have a very dynamic investment migration industry. We have seen over the past years programs coming, eventually closing, modifying the investment routes, increasing the investment thresholds across. So what we always advise our clients is our industry, investment migration, is constantly evolving. So if you want to secure current conditions of the programs when it comes to investment thresholds, the qualifying criteria, the different aspects that they offer today, most likely our advice will be to move forward and eventually embrace the process to get that residence permit or that citizenship, because we don't know if these are going to be changing in the next few months, weeks, or years. So that will be my personal recommendation to every prospect that you may have as your clients as well. Maybe if you are a prospect thinking about doing one of these programs, well, think about the timing. I think given the current conditions in different parts of the world, we're seeing a lot of geopoliticals going on. So certainly you want to embrace the process to get one of these residence permits. Particularly in Latin America, different than any other parts of the world where we see the investment thresholds relatively higher now. Processing times are quite, becoming more extensive, notably, for example, the European programs in certain cases. Latin America, it's still one of those regions where we still have very attractive proposition when it comes to how to acquire this residence permit. And also the processing times are still not very long to get those residence permits or eventually establish residence in these programs, right? So the three programs that we're going to be speaking today are residence programs. So these are not citizenship by investment procedures. Well, there are some opportunities in Latin America to eventually get citizenship through investment. One of those examples is El Salvador. But those are typically residence programs that could lead to citizenship, and that will most likely depend on the time that you do spend in the country and eventually could lead to citizenship. But for now, we're going to concentrate mostly on the resident side of the story. Okay. So once again, three programs we're going to be focusing today, and that is Costa Rica, Panama, and then Uruguay, going from north to south, and that's the way we will present them. So the first jurisdiction is probably one of the most popular ones from a marketing perspective, if we want to say it that way, right? So Costa Rica has done a great job to eventually promote the country as a whole, and it has attracted attention from people from all over the world. Now that we have seen on our report that is effectively attracting high net worth individuals, we see a trend of people eventually being interested in Costa Rica because of the overall proposition that the country brings to a global investor. So a relatively small country, population 5.2 million approximately in population. Of course, Spanish is the main language, native language in the country, but English is widely spoken now that we have seen even more tourism going into the country and of course more residents, people moving to effectively Costa Rica, and that's why English is widely spoken throughout the country. Okay. Now, When it comes to the citizenship of Costa Rica, it's actually on the top 30, a very good passport for those that are eventually are interested to pursue a citizenship movement here. You will need to live in the country. It's not a citizenship process, citizenship program, sorry. This is a residence program, but eventually, if you are looking to get that Costa Rica passport, a very powerful one that will get you over 150 destinations overall. Now, what are the key benefits of eventually getting that residence permit in Costa Rica? It's, of course, a very stable, very safe jurisdiction, very strategically located in Central America, well connected to the rest of the world. It's definitely, geographically speaking, time zone speaking, very attractive for a lot of people to eventually consider moving to Costa Rica, but it's not a requirement to move there to get that residence permit. So I think this is the beauty of investment migration when you're doing this through an investment route, a route that will get you that residence permit. And in Costa Rica, we don't have that imposing of large physical presence requirement for people to maintain that residence permit. So very friendly when it comes to business environment as well. Favorable tax regime. Of course, Peter will give his insights as well, more territorial taxation system that we have here. And it's very family oriented to be including your spouse, your minor children, even adult children that meet certain specific criteria. Costa Rica will be that type of program that you can secure in a very strategic jurisdiction, a residence permit that as of today, it's very affordable. And at the same time, it is not taking ages to get that residence permit. It could lead to citizenship for people that effectively live there. That will be 7 years as a general rule. But if you're coming from a country that perhaps is a Spanish-speaking country, Central American, Spain, and some others, maybe that time frame can be reduced to 5 years. So a path to citizenship, but the residence permit itself, a very solid proposition for global investors that they want to have an alternative option in Central America with a very affordable price tag today. Now, what are the different routes that we can obtain a residence permit in Costa Rica? Of course, we have the investor residence permit, in which if you invest 150,000 US equivalent in one of the available routes, such as real estate, maybe you're investing in Costa Rica companies or the Costa Rican stock market, that 150,000 US dollars could be the basis for you to get a residence permit in Costa Rica. Okay, so this is for people that they want to get real estate, for example. It's probably the most straightforward option that people are choosing these days. You'll need to already have purchased the asset before making an application to the residence permit, but this is certainly an available route, 150,000. In Europe, we have some programs that are comparable to that amount, but certainly Costa Rica will be an attractive proposition. Open market as of today in real estate. We have seen it in other countries. As these programs they get more marketed and eventually more mainstream, the real estate routes may be limited in certain ways. Costa Rica, it's still not the case. An open market, very attractive value for real estate investors. But of course, you also have the other ones, Costa Rican companies or the stock market. So that is one of the routes available to get a residence permit. This will get us a temporary residence permit that could lead eventually to permanent residence and citizenship in the future. Another route that I like is the fixed income residence permit. So this is based on investors, entrepreneurs, families that they have a monthly income, passive income of at least 2,500 US dollars coming from abroad, or that already produce in Costa Rica. That residence permit, it will certainly be the same as the investor visa. So also a temporary residence permit for 2 years and a very attractive low threshold of 2,500 US dollars of passive income. There's another way of eventually applying to the program, which is making a deposit into a Costa Rica bank account of 60,000 US dollars. So as you can see, very attractive figures still. The way that it functions in practice is that they break that 60,000 US dollars into certificates of deposit of 2,500 US dollars, and that generates its passive income that you have. So that it will be probably one of the most straightforward, easy options to get a Costa Rica residence permit for those that have passive income or are able to transfer 60,000 US dollars into a Costa Rican bank account. And the last one, which is probably for a lot of the audience that we have as well, people that are retired, if you are in that stage, um, definitely one of the most attractive thresholds that we see, 1,000 US dollars for people that have a pension, that it's a lifetime pension, will be able to qualify for this specific route of at least 1,000 US dollars, and then you can get a temporary residence permit. Coming to the validity of the permit, so you will get a 2-year residence permit that is renewable for the same amount of years, so the same period of 2 years. However, after being a resident for 3 years, we're actually able to convert that residence permit temporary into a permanent residence permit. So that gives a very attractive proposition, very quick path to permanent residence, and very low physical presence requirement. So Costa Rica doesn't impose a minimum physical presence that is very high. The only thing that we need to keep in mind is not being absent of Costa Rica more than 12 consecutive months. So that gives us virtually a 1 day at least per year to maintain the residence permit. We always suggest to stay a little bit longer, of course. If you can stay longer to enjoy the country, that also reinforces your presence there. And as long as you are not absent more than 12 consecutive months, you should be able to continue renewing your residence permit, whether that is a temporary or the permanent resident ones. Once you become a permanent resident, you can liquidate your investment. So that is attractiveness of eventually arriving to that 3-year mark where you can convert it to a permanent residence because you are not longer requiring of your investment. So if you eventually want to liquidate your real estate investment or you want to move your 60,000 or you're not required the passive income as a temporary resident. So that's one of the advantages here. So the process to eventually get that residence permit, it's quite simple. Of course, you contact us, we'll be able to assess the eligibility. We always run our initial due diligence checks just to make sure there's nothing escaping on our side from the compliance perspective. We sign agreements of engagement, a retainer, and eventually we start collecting documentation to make the application and file it to the government. There's 2 visits really in practice to go to Costa Rica. The first one will be at the early stage of the process to sign some documentation locally in Costa Rica. And then eventually you can already stay in Costa Rica if you wanted to reside there full time. That's an option. You could get out of the country and come back in about a year. It's taking right now that residence permit approval. And that's when you will need to eventually come back to Costa Rica and then get your biometrics done, your residence permit. So that's why we suggest, be prepared to do 2 visits, one at the early stage, close to the submission. And then about 1 year later, you'll be able to get your residence permit and you'll need to come back to Costa Rica. Perfect. So now we're going a little bit further south and east into Panama. Also, one of the greatest residence permit available in Central America, in Latin America. A very dynamic country, of course, population small, but with a very, very good proposition on their residence permits and offering when it comes to attracting these global investors overall. As a reminder, what Peter mentioned to us, because Panama is one of those jurisdictions that we have seen a growth of high net worth individuals as well. People are coming to effectively get that residence permit, but also even to relocate into Panama. Jurisdiction that it's US currency based. So the US dollar is used in Panama widely. And of course, Spanish is the main language, but a lot of the people in Panama will speak English. Very business friendly. A lot of people, they like to conduct businesses in Panama. A very dynamic capital city, Panama City, but also offering, the countryside, the oceans on both sides. So it's a very, very attractive jurisdiction with a great airport that it's connected to a lot of destinations worldwide. So they call it the hub of the Americas, not for a very good reason there. The airport is definitely fantastic. Investment thresholds, we have a few options here. When it comes to investment, the minimum investment required will be 100,000 US for the lowest investment route. And of course, people that will want to pursue the Panama citizenship, here we have also very solid passport within the top 30 and access to 140 destinations worldwide. So very solid jurisdiction, very attractive from a business perspective, geographical perspective, well connected to the rest of the world. Key benefits, of course, is being based or having a residence permit in a tax-friendly jurisdiction, one that has low physical presence requirement, very family-oriented when it comes to adding your spouse, minor children, adult children can be included, also subject that they meet certain dependency requirement. But it allows to include parents of any age, which is also very interesting for people that are considering doing these type of movements as a family. Panama, it's one of those that allows to tag along our parents in our application should we desire to include them as well. So certainly a good jurisdiction for banking, a good jurisdiction that this stigma that used to be about Panama Papers is not longer there really when it comes to the actual jurisdiction. They're getting very solid on their due diligence procedures for banking. So certainly being removed of all the different lists that in the past Panama had, kind of like a shadow there. People are now coming back with a very solid jurisdiction and a very attractive place even to live and retire. When it comes to the investment routes, of course, the most attractive option available today, it's a qualified investor route. So this is the one where we get permanent residence directly. We are able to do this through a different ways of applying for the residence permit, either through real estate, we can invest in the local economy in the stock exchange investments, or we can even make a capital transfer and do a fixed term deposit in a banking institution. So very attractive path towards permanent residence through the qualified investor. It gets priority processing, so definitely very fast to get that permanent residence. We need to hold the investment for 5 years. That is one of the conditions of this route. But as you can see, relatively affordable amounts as well. 300,000 would be the minimum in real estate, 500,000 US in stock exchange investments, and 750,000 US dollars in a fixed term deposit in a local financial institution. So the qualified investor is probably a program that was revamped over the past few years. There was initially an amount to be increased for the real estate investment from 300,000 to $500,000 US. For the moment, it's still maintained 300,000 US dollars. So people that are interested in the real estate market in Panama, very dynamic, open market as well. So that could be a very good proposition here. Now, it's not the only way to get residence permit, probably is the most attractive to those that are not looking to, come and do several visits. The qualified investor has that type of benefits that allows investors to apply remotely, very straightforward procedure, and you'll only need to come once you get that approval in principle. So the qualified investor may be the best route out there for Panama, but of course we have some other options available. We have here what we call the friendly nations route. This is for a certain group of countries that Panama considers, friendly nations. So not that they are not friendly with all other destinations, but they have selected a few jurisdictions in this list. And for those nationals that held a passport, let's say a Canadian, a US, and European, they're able to get a preferential investment threshold. Two available routes here, 200,000 in real estate, or this capital transfer into a fixed term deposit of 200,000 US will also get us a residence permit. In this case, that will be a temporary residence for 2 years. That after 2 years, if we renew it, we can apply for the permanent residence. So a little bit longer path to permanent residence here, but also a very attractive investment threshold for people that they may want to get to know Panama on a temporary basis with a lower investment threshold, also available in the real estate market and a fixed term deposit here. And then we have another route, which is also interesting for those that want perhaps a different type of alternative asset class, which is forestry investor. Here we have people that they are investing in teak reforestation projects. Typically, these are for longer term of investment horizon. 100,000 US into the temporary residence will get us that. And if we invest a higher amount, 350,000, will get us permanent residence directly. So those are the two routes under the forestry investor route. These are the main ones that our clients are selecting for Panama at the moment. But of course, we have a few other available options. There's also a retirement visa for people that have, that kind of income, and some others that we can definitely explore for the Panama program. Now, the process to apply, it's very similar to the one in Costa Rica. You get in touch with us. We'll run the different due diligence checks just to make sure that we are eventually constructing the application. We'll get all the documentation gathered, and then depending on the investment route, we'll help you identify the suitable investment option there. After this, we'll file the application, and then we'll get that approval from the government, and you'll be able to get your residence permit at some point down the road. Perfect. So I think we went over this one, Peter. So we can go to next slide, please. So the last destination that I will be speaking, and then I'll hand over to Peter to come back on the tax element, which is also the focus of this webinar, will be the Uruguay residence program. So a very attractive jurisdiction that's been getting more and more attention over the past months and years, and definitely one that is combined with this tax element that Uruguay has as an offering to global investors, which is the possibility to get tax residence also through an investment in the country, and that will be through a real estate investment. But I'll go very quickly into the residence, which is called legal residence in Uruguay. A very interesting country, of course, a little bit further south in South America, in between Brazil, Argentina, and Paraguay. This is a very stable country. When it comes to politics, they're very, very not drastic or extremist in their politics. Overall, very stable. Economically speaking, it's a country that it's also growing. Population, it's a small country, but certainly becoming more attractive when it comes to outstanding place in Uruguay, in South America. One of the key benefits is that we still have a relatively stable country from all the different crazy things going on in the world. Very similar to New Zealand, people call it the geographical safe havens, at least in South America. It's one of the most attractive places, one of the most developed, safe, and secure. Definitely a place where people can have a very dynamic real estate industry offering for those interested to eventually invest in the country. Not only residential, but a lot of investors are looking at Uruguay from buying land, buying, residential property, commercial property. So certainly it's been getting more attention over the years. Most likely Brazilians and Argentinians, they know very well these jurisdictions, but the rest of the world, it's becoming more and more popular. So what Uruguay has to offer, it's certainly a highly sought after jurisdiction that it's relatively unknown from all the aspects compared to other jurisdictions. So it's a very good place to invest when it comes to the timing as well. A very attractive, convenient process, relatively simple and straightforward. They have this tax incentive, tax holiday that eventually Peter can come back and give us more detail on there. But this is probably one of the elements that people are looking at Uruguay. Their legal residence is not based on an investment per se. It's mostly based on the intention to reside in Uruguay. So what they mean by intention to reside in Uruguay, it's really by creating the links that you have with the country. So someone that has the intention, the possibility to come and live part of the time of the year in Uruguay, that is going to be perhaps investing in Uruguay, that's what they're trying to look for when it comes to authorizing your residence permit. So we have two options here. For people that come from Mercosur, it's probably a facilitated procedure. people that are not from Mercosur countries, they will need to eventually provide a monthly income of at least $1,000 of passive income. And then eventually they'll need to come and have a valid vaccination record that needs to be recognized in Uruguay. And of course, they will need to have this intention to reside in Uruguay, which will be reinforced by the fact that you spend time in Uruguay, you make investments in the country. That's what they're trying to look at. Now, coming back to the residence by investment, this is really for people that may are pursuing tax residence. That is one of the requirements, at least for the two routes that require less physical presence, but it's not a mandatory element, at least for the legal residence migration part of the story. So the process as well, very simple. Feel free to get in touch with us. We'll be able to assess the eligibility, understand your situation so that we can determine what is the best course of action when it comes to getting your residence permit in Uruguay. We'll evaluate the source of income that you have so that we can understand, under which specific route we will construct your application. And then a few months later, we can get your residence permit in hand. Perfect. So just a very brief overview. I think the key benefits we said, you're allowed to live, work, study, and eventually do business in Uruguay. There's a path to citizenship for people that are pursuing that route. That will be requiring your physical presence of at least 183 days per year in the country. So this is not a back pocket residence permit that can lead to citizenship. Definitely, you'll need to stay more than half of the year in the country if you're pursuing citizenship. For those that are single, that will be 5 years of time frame. And for those that are married, that will be 3 years of eligibility time frame to eventually become eligible to apply for citizenship. And I think we can go back to you, Peter, if you can perhaps give us some details about the tax systems in these three jurisdictions and what are the attractive elements that people can be looking at these three.
Well, thank you very much, Michelle. That was very comprehensive and very detailed. So thank you so much for that. So as we said at the beginning, territorial systems are the simplest thing, and for foreign investors, always very attractive. So Costa Rica and Panama, will only tax you on the income that you earn in that country at a maximum tax rate of 25%. So as a regional hub, and particularly for those that aren't that far from the US, it can be very, very convenient place to base yourself, but you do have to be there more than half the year to become tax resident to be eligible for that. Now, Uruguay is more interesting because you've got the 183-day rule or permanent home, but there's also the opportunity to become tax resident by investing in real estate. Now, you'll remember a long time ago, nearly 40 minutes ago, I talked about half an hour ago, I talked about it's not only 183 days, it's also if you've got your only or main home in the country, that the country has the right to consider you as a tax resident. Now, because of the nature and state of the Uruguay property market and real estate market, they consider the assumption that if you spent more than $500,000 on real estate there, that is reasonably likely to be your only or main home. And therefore, if you spend more than 60 days there, they will assume at your request that you are a tax resident. Not only that, if you spend $2.5 million, even if you don't spend 60 days there, they will let you ask to be treated as a tax resident. So Uruguay is one of the few countries that gives you tax residency at a very low physical presence level, which can be very helpful. It's particularly helpful when combined with the tax holiday. Now, you'll see I've got 10 years in here and Michelle had 11 years in there. It is the year of arrival plus the following 10 years, which is how you get to 11. So it's over, yeah, at least 10, but up to 11. And so foreign income, foreign source income would not be taxable in Uruguay. You'd still be taxable on any Uruguay source income. So it is effectively a territorial tax system in practice. So you combine that with the low residence requirements, and it can be very, very useful, particularly for someone that travels around the world. The challenge of it is that Uruguay has about 20, 25 double tax agreements, and there's only two people in the Ministry of Tax that have the authority to go and conclude some more because it's such a small country. And although they assure me they're working as fast as they can, then there's a limit to the number of double tax agreements they can sign within the year. So if another country thinks you are tax resident, you would need a double tax agreement, and there aren't that many of them. So it looks easier on paper than it is in practice, but with a little bit of planning and a little bit of care and attention in leaving the other country, it can be a very, very useful tool to be a base yourself from a double taxation agreement perspective, or just for a domestic tax agreement perspective. Now, for US citizens in that corridor, that third segment of the world, it's very, as I say, convenient for the US, particularly for Panama and Costa Rica. Now, the worldwide taxation based on citizenship means that for US citizens relocating, it's very, very rare for there to be any practical tax savings achievable or obtainable by relocating. However, as the US has relatively low tax rates in some respects, particularly when you look at joint filing or long-term capital gains, the only main issue is to have a tax charge lower than the US to mean that at least the foreign taxes won't be higher than staying in the US. And all three of these countries do meet those criteria very, very effectively. And having a lower tax charge in the US means that there's no effective tax cost to becoming tax resident there. Also, as Michelle says, depending on whether it's 3 years, 5 years, 7 years, citizenship can be obtained once you physically move there. And one criteria to give up your US taxation on worldwide income is to cease being a citizen. You can only cease being a citizen if you are a citizen of somewhere else. And in that respect, the ability to get citizenship, from 3 years or worst case, 5 or 7 years of living in one of these countries does mean that for US people, it is very potentially attractive to move there. So that's really where we are. So taxation, Costa Rica, Panama, or Uruguay. There are other options potentially coming available later in the year. We'll have some discussions later in the year around that. So yes, so those are the main oversight there. And let's move to the questions and answers. So I'd like to invite Michelle back in the conversation because we have a question from anonymous attendee about the friendly nation visa. Establishing a local Panamanian company, is that an option as well? Michelle, I think you sort of looked at this
Yeah,
before you come in.
definitely. Yeah, I can definitely touch base on that one. So the friendly nations visa definitely has different ways to apply. It will depend on the citizenship. As I mentioned, there's a list of countries that qualify. The real estate or eventually the bank deposit is the most straightforward option, but it is possible to eventually make that specific through business registration as well. So it is possible, and we'll be able to assist as well in that one.
Okay, brilliant. So thank you very much. Other questions, please feel free to type them in there. I think, Michelle was so comprehensive. I think it's great sometimes when there are no questions, it means he's done his usual great job in explaining it. I will leave it a moment or two to see if we do have any other questions. If you've got questions that you don't want to be answered publicly, these are our contact details. And I'll leave that slide up there for a little while so you can note down if you've got tax questions, feel free to come to me. If you've got questions about the programs, come to Michelle now. Just I would add that our tax department is our role is to sort of sit between the different programs and advise you on how to rule out, how to decide your criteria for choosing a country. When you get to the point of moving to Costa Rica or Panama or Uruguay or indeed anywhere else, we will usually introduce you to a local tax advisor in those countries. And I noticed that one of them is on the call. I'm not just saying that because he happens to be on the call. But yes, that's always our standard way of doing it. So yes, we will introduce you to the right people at the right time. Oh, while I've been saying this, there are more questions popping up. Is there a country that is better than another? So it entirely depends what you're looking for. I always say Costa Rica if you like the countryside, Panama if you want the city, Uruguay if you want, mountains and more of it. I think this is also personal. I think the strangest thing I find myself doing in this job is prescribing people to take foreign holidays to decide where they can see themselves living or where they feel right in terms of living. Because if you don't know where you feel happy or where you feel comfortable, then it is very difficult. Michelle, do you have anything to add to that? I mean, I think that's really, it is so personal, isn't it?
Yeah, I mean, my suggestion would be why not get into three of them now that it's possible and relatively affordable. But of course, that will depend on the financial capacity and maybe the goals that you want there. I wouldn't say there is one better than other one. Definitely, it really depends on the goals that we have and the strategy that we are implementing as an investment migration strategy. Will depend on what you're looking for. Are you looking more for real estate investment? Are you looking more of a lower threshold, or eventually through these passive investment routes? So that's what we try to understand when we eventually speak to our clients at the beginning of the process when we understand and construct the investment migration because we can assist you with the three of them. We don't really have a bias when it comes to the jurisdiction, nor a bias of the route that you will be choosing to get that residence permit. So
And I
feel free
think
to touch base with us and we can explore the options. Sorry, Peter?
I think that's a very important part of it because we cover so many programs around the world. Our job is to find the right one for you. And I think we sometimes see people offering, oh, well, subscribe here to be, talk to us to be about residency here. And I've seen somebody recently on a different, be sold a program in the country because he asked in that country. It may not have been the best country for him. And I think our job is to make sure that that we're getting the right country for you, whether it's from the investment perspective or the quality of life perspective, the family perspective, education. Just we got a lot of questions here, so I'll zip through a
Yeah.
couple of them. Can we assist in setting up a corporation in Panama? Yes, that's the answer to that. That's very simple. Can you get legal residency in Uruguay without making the investment? Yes, you can. It's about having proving that you can support yourself. So yes, that can be done, and yes, you can just continue to renew it. The 60K fixed deposit in Costa Rica, that is for the normal residence permit. That's not to be permanent. That's just the regular.
That's yeah, that will get us to first the temporary residence permit. I mean, there's no direct path to permanent residence in Costa Rica. So the 60,000 deposit into a Costa Rican bank account, that will be broken into 24 2,500 certificates of deposit. We will generate the fixed income, right? So that's the route that we will be applying. That gets us temporary residence for 2 years. After the 2 year period, we can extend it for another 2 years. And then at year number three, so that will be after we got approved, 3 years later, we can actually convert it to permanent residence. And once we get the permanent residence, that's when we can actually liquidate the investment as well. So coming back to that question, so that is for temporary residence. And at year number three, we can convert that to permanent residence and then liquidate the investment.
Yeah. There's a couple of questions about minimum time requirements. I think for Uruguay, I don't think there's necessarily a minimum time requirement. It's
Yeah.
more, that you need to be there a week or two occasionally to keep the permit renewed. But there's no specific obligation to move to either Panama or Costa Rica, is there? I think it is um, if it's
For
only
Uruguay specifically, once again, this is based on the intention to reside in Uruguay. So the government is indeed looking for people to come and stay in the country to generate those links with Uruguay. And of course, we always recommend to spend some time, a month per year. That will be something that will reinforce this intention to reside. There's no minimum defined by law in order to maintain the residence permit and being able to continue keeping it, right? But if eventually someone comes and spends some time in the ground, they will purchase a real estate that will reinforce this element about the intention to reside. Maybe they will incorporate a business and they will, invoice their clients from that business. They are banking in Uruguay. So those are the elements that will be evaluated in order to keep on renewing the residence permit. It is permanent by nature at some point, but it's every 3 years we need to renew the permit, and that's when the government will evaluate if you effectively have been living in the country some time and generating those links in the ground.
So it's
So
a
that
fact
answers that.
facts and circumstances because you maybe someone's got a regional job and they travel quite a bit, but they go back to Uruguay between each trip, then their days may be lower. But I think it's there. So physical presence while waiting for the residency in Panama and Costa Rica. I think this sort of comes back to processing times, doesn't it? Are you allowed to be there
Yeah.
while your application is being processed?
Yeah, so in Costa Rica, coming to Costa Rica first, once you travel to Costa Rica and you sign some of the paperwork required, you can then leave Costa Rica. Really, the processing time you're able to stay, so that wouldn't be an issue if you eventually want to stay and already live there full time, you would be able to do so. But you can leave and then come back once that approval is obtained. Right now, it's taking about 12 months for that to happen. So there's no minimum presence requirement during the processing to effectively be in Costa Rica. Now, once you become a resident, whether that is temporary or permanent, you'll be required to be in Costa Rica at least once a day every year, because if you are absent more than 12 months, that is one of the requirements. The physical presence is very low, but you do need to come every year at least once a day. Now, we always recommend perhaps maybe spend a little bit more just in case, but yes, that is a requirement. Now, for Panama as well, for the qualified investor, there's no necessity to eventually be in Panama in order to apply. That's why we suggest for clients that they want to have the maximum flexibility when it comes to physical presence. A qualified investor route will probably the most efficient one to lower that minimum physical presence. Once you get permanent residence, you need to come once every 2 years so that you don't lose your residency rights as well.
Okay. Okay. Thank you. Do we have any, where is best to live in Uruguay? I think that's so personal, isn't it? If Montevideo is lovely, Punta del Este is very popular for tourists, but also some people like if you need to get to Argentina a lot, there's some options very close to Buenos Aires. I think it's it's just yeah, I think it's very much depends on what people want to do. I think places that are um sympathetic for foreigners. People, it's a Spanish-speaking country, so if you speak Spanish everywhere. But Michelle, when you go there, which places do you like to visit?
I mean, Punta del Este is certainly one of those places that could be considered the Saint-Tropez of South America, or a little bit like the Monaco there. Very popular during the summer times. A lot of foreigners come and spend their summers there, but more and more we see Punta del Este as one of those places where people are relocating and effectively living there. It's not the only place. There's so many places around, of course, but that will be for those type of foreigner communities as well. But Montevideo, it's certainly a good place to establish, also to conduct business. That's the financial center of Uruguay. That's where the government is. So for people that are perhaps more business oriented, that they want to do business, Montevideo will be the place that they want to be around.
Also, just for the flights and that kind of thing. But I say it's amazing how close it is to Buenos Aires. So people need to get to Argentina a lot, for example. It is quite popular as well, isn't it? And that's the other side. I forget the name of the town there now, but it is. But even Montevideo, the flights to to Buenos Aires are very short as well. Um, if I were to go through Uruguay, I'd like to go and visit first, which means a visitor visa is required. I think it depends which countries, isn't it? Because
Yeah, some countries they don't require a visa to enter your way. Of course, if your nationality requires a visa to come and visit your way, we will need to start the process at the consulate level so that we can get a visa to eventually come to your way, and then we'll be able to launch an application for residency. So if that is the particular case that you're from a country that doesn't have visa-free access to your way, the process, of course, we're able to assist. We will just need to make that additional step of getting a visa to be able to travel to your way and then apply for residency.
yeah, but talk to our office there, and you got Michelle's office details there. But if you're serious about moving there, I think they're quite keen to have people come. So I think the usual things about visitor visas, if you can demonstrate that you've got a return ticket and that you've got sufficient resources, I think it's shouldn't. I haven't heard it being too much of a problem. The question I haven't answered yet that's been sat there for a while. Do we have any solutions for clients that want to use digital assets for investments? I don't think many of these programs yet allow you to make your investment through a digital asset or a cryptocurrency or whatever. But I
There
suppose
are some options. Yeah, there are definitely some options. Some countries are more crypto friendly or digital asset friendly from that perspective. So we're more than happy to eventually explore those available options. It's mostly about the eligible investment that could qualify, but certainly we can explore the options available for people that are in that space.
yeah. Okay. And a lot of obviously a lot of crypto people like to look at countries with very these countries are particularly crypto friendly in certain respects because of the territorial tax system. I'm not aware of any Panamanian based digital currencies, for example, but probably that's the kind of thing to look out for before going. But yeah, great question. We are right at the top of the hour, which is when we're scheduled to finish. So unless there are more questions, which was thank you so much for that many questions. I'd like to, all it remains is for me to thank Michelle for all of his great comments here. It's always a pleasure being on a webinar with him because I always learn so much. And thank you all also for being here, staying till the end, and for all your questions. So thank you. Feel free to look out for our next rounds of webinars on all kinds of topics coming up soon. And until then, it is thank you very much. Good night, or good morning, or whatever it is for probably for wherever you are in the world now. And we will see you next time. So thank you very much.
Thank you, everyone. Thank you, Peter.
Bye.